I'm delighted to welcome Pedro Gonzalez de Cosio, co-founder and CEO of Pharmakon Advisors, the investment manager of BioPharma Credit. Thank you for joining us today.
Thank you, Milos, and thank you for having me on.
Maybe you can start by providing us with an overview of the investment strategy of BioPharma Credit for those investors who are less familiar with the company.
Sure. So BioPharma Credit invests in debt issued by life sciences companies. In order to break this apart, what this means is that we only invest when the borrower has a product that is either a drug, a device, or a diagnostic. So we do not lend to hospitals, physician groups, etc. The other thing that's critical is that we only assign collateral value to the approved product in the approved indication in the approved territory. This is important because many of our borrowers have very attractive clinical trials ongoing. In fact, most of our capital is usually going to fund clinical trials. However, as lenders, we have to assume that those clinical trials will fail and that the company will only have the existing approved product to service the debt. And that pretty much removes all of the clinical trial risk or the approval risk from our strategy.
Thank you. And maybe can you talk about how you benefit from the current trends within the life sciences sector, such as the increasing fragmentation of the biotech landscape?
Absolutely. So we have been in business for 13 years. Pharmakon Advisors, the investment manager, has been in business for 13 years. Before that, there really wasn't much of a need for a life sciences lender because most of the products were developed and sold by big pharma that didn't need our type of capital. The fragmentation that you mentioned is what has been driving the need for our capital and what will continue to drive it going forward. Every year, you're seeing more and more new products getting approved that were developed by small and mid-sized companies, which are ultimately our target borrowers. In fact, the FDA was approving about 25 drugs per year when we started in 2009. And about half of those drugs were developed by small and mid-sized companies, right? That grew to about 50 drugs per year towards the end of the decade. And all of the growth came from products developed by small and mid-sized companies. So we have been enjoying this period of just seeing a boom in new companies with approved products. And we expect that to continue for the foreseeable future.
Thank you. That's helpful. BioPharma Credit has a quite concentrated portfolio, but we have been able to prudently select borrowers with all the senior loan investments made so far, generating a healthy IRR. This also applies to the private funds managed by Pharmakon Advisors. What do you consider your key success factors?
Sure. So the concentration of the portfolio is driven by the fact that we do 4 to 6 investments on an average year. And there are periods in time when we do fewer investments, right? And as a result, if you have more prepayments than new investments, then the number of investments declines and the concentration remains steady. We continue to see a trend towards more diversification over time, and we will continue to invest. Ideally, I think the portfolio could reach about 20 investments, and that would be a steady state. Again, the timing of prepayments is out of our control, so it's difficult for us to control. I think the key success factors as to why we have been successful is, first of all, we haven't had a single default or bankruptcy, right? So if you have a fairly concentrated portfolio, if everything performs well, then the funds perform well. The driver for us not having any defaults or bankruptcies has been a very conservative analysis of what transactions we do and which ones we don't, right? The life sciences industry is quite broad. There are many great opportunities. There are some very risky opportunities. In fact, we say no 8 times out of 10. No? Why? It's not because the drug is bad or the management is bad. It's simply that sometimes we find that companies are seeking to borrow at times when there's still unanswered questions as to what is the potential of this particular drug, so the commercial potential. So we're very careful saying no. It's sometimes we get it wrong, meaning sometimes we say no to companies that do very well, but that's okay with us, right? I mean, as long as we're not saying yes to the wrong deals, then we're okay. No? So again, it's being conservative, it's being very credit-minded, that has helped us over the years.
Thank you. And how do the current conditions in the public equity, convertibles, and M&A markets influence your pipeline of investment opportunities?
Sure. So again, we've been around for 13 years, so we've seen ups and downs in the equity markets. Our returns are not correlated with equity markets, and they're not correlated with anything else that's going on with the economy. Our returns have been very steady over time. What is impacted by equity markets is how much capital we deploy on any given year or how many deals we do on any given year. For example, 2020 and the first half of 2021 were banner years for the biotech equity markets, right? Share prices were trading at or near their all-time highs. That drove a very large issuance of convertible bonds, close to 80 convertible bonds in our space alone, raising close to $30 billion, right? There's many of those companies I would have loved to have lent money to, but they felt that their share prices were attractive and did converts. What it meant is that during that period, we did few deals, right? Again, we are very conservative. We're not obligated to close a number of deals any year. We're fine not chasing yield and definitely not chasing risk. Starting in the middle of 2021, accelerating towards the end of 2021, you started to see a decline in share prices in the indices of biotech in the US. And that has resulted in most companies no longer trading at their all-time high. In fact, some of them trading at big discounts to their all-time highs, meaning that they are more interested in non-dilutive forms of capital, right? As a result, we've deployed close to $1 billion over the past 12 months, right? And looking forward over the next several months, we think we have an ideal market where there's going to be plenty of opportunities for us to deploy all of this capital that we've been getting back.
Perfect, thank you. Now, you have delivered a solid dividend yield in the past of at least 7%. Do you plan to sustain this dividends policy going forward?
Sure. The idea is to pay a dividend that's higher than 7%, right? The 7%, we look at it as kind of like a base, no? And in fact, I think there's only been 1 year, which was 2021, where we just paid the 7 cents. In other years, we've paid in excess of that. And the way we do it is we pay a 7-cent annualized dividend during the year. And then in February, March, we pay a special dividend representing all of the net income in excess of the 7 cents. So we distribute 100% of the net income. And the way we do it, again, is 7 cents annualized during the year and the excess as a special.
Pedro Gonzalez de Cosio, co-founder and CEO of Pharmakon Advisors. Thank you very much for your time.
Thank you, Milos. Great to see you.